Continue to leave them in the description, and I will certainly pick a winner at random and do a crypto giveaway. I might do a few of them, especially since we're in a bear market and I want to give you guys a chance to win something. What is going on, crypto peeps? Welcome back to the Traveling Crypto. Let us get right into it. So looking at this is altdex.co. I'll link it in the description since we've never seen this or used it in previous videos, but this is basically a great index of the top 100 alts, and it gives you a good picture of what's going on because obviously we have over 1,700 cryptos, and to make our way through the noise, if you want to get a sense for what's truly going on in the market that people care about, you would condense those to the top 100 alts as well as looking at Bitcoin, obviously. So looking at the top 100 alts, 12% of them have turned or are profitable in the green today. 88% of them are at a loss. Alts are continuing to take a beating, right? So if you look at, there is a graph in TradingView. This is awesome. This is the top alts mapped out on a TradingView graph. You'll see that we are at the point that we were back in December 26th of 2017 before we saw this parabolic rally. So you know what that means? That means that from this point, we are now going to see a parabolic rally similar to what we saw end of 2017. I'm just kidding. That's not what it means. What it means is that this is the low for 2018, and we've actually tested it a couple of times, once during the beginning of August and today. So we'll see what happens from here on out. It would definitely suck if we got further down, not for any emotional reason, but for the fact that if we decline further, the market could just create a snowball effect and tumble further and further and further. And that just means that we have a lot longer to climb up. And I know that most of you are sick of this bear market, as I am as well. However, bear markets could last a very long time. The one in 2013, 2014 lasted almost 2 years. So for those of you new to crypto, yes, it sucks being in a bear market, but you know, we've only been in a true bear market since the decline after the January highs. This could continue for a year and a half. This could end by, you know, September, depending on what happens with the fundamentals as well. Something like an ETF decision or positive ETF decision could really take us out of the dumps and then create a snowball effect to the upside. So speaking of ETFs, let us look at Bitcoin's price real quick, and then we'll jump into ETFs. So looking at Bitcoin's price, you'll see that we are in this descending triangle pattern, which is an overall bearish pattern. And the longer this pattern sustains, the more valid the pattern is. And this has been going on for 7 months now. Now, this is a trend or a pattern, right? Those are meant to be broken. However, they can fail, right? In this case, this bearish pattern, if it fails, will break to the upside, or they can be confirmed, in which case we'll drop back lower. Hopefully we don't go below 5,800, although there is a chance we'll get there. I'll talk about that in a second. If we do go below 5,800, the next possible point of support is at 4,300. Now, here's why we could go below where we are currently to 5,800, and it's because we see this pattern forming. This is a traditional head and shoulders pattern. This is a bearish pattern. If it's upside down, it's a bullish pattern. But in the regular head and shoulders formation, this is a bearish pattern. That is a terrible drawing, by the way. We do see heavy support at around the 0.786 fib level for now, which is around $6,300, $6,400. And there is bullish divergence between the price, this white line here, and the stochastic as well as the RSI. So the price made a higher low, stochastic and RSI made a lower low. That is bullish divergence, given that we get some volume, some green volume in. If we don't, the divergence itself doesn't really mean anything, and the bearish descending triangle, as well as this bearish possible head and shoulders formation, could bring us further down. Now, if this head and shoulders does not form, then we could stick around this level, maybe try and retest the resistance of this descending triangle. I know it's not what you want to hear, but I'm not one of these technical analysts or pseudo technical analysts that, you know, give you a definitive price that we're going to. Technical analysis is all about conditional statements. If this happens, this could be the next likely move. If this happens, this could be the next likely move, right? Nobody knows the future. So what we do is take in new information and go from there. And this, based on the information we have now, this is the analysis that we have. Now, like I said before, good news can spur an upward movement and a failure of this descending triangle pattern. Good news, obviously, in this case, being the looming SEC decisions on the ETFs. So there isn't one ETF, if that's what most people are thinking. There are actually 9 ETFs. There are ETF brokerages that basically apply for the approval of their own ETF that is traded in their brokerage, right? So in this case, and I have a few of them listed here with the dates. So you'll see Pro Shares August 23rd, Granite Shares September 15th, Direction, if that's how you pronounce that, or Direction, September 21st, Solid X, which this one is the most important one and the one that you probably hear get quoted, September 30th, because this is the one that is tied to the CBOE. So depending on what happens with these decisions, each of these can spark either a retracement back down to lower levels or a rally. All right, going back to the technical analysis, I wanted to take a look at Stellar real quick because Stellar is it's one of the few alts that's actually performing really well right now. And if you're wondering whether there is a position to open, yeah, I mean, you could certainly justify opening a position here. This is not financial advice, but you can certainly justify opening a position here because we're trading in this classical symmetrical triangle, right? And this looks to be a bullish symmetrical triangle. If we're coming from lows and we see a parabolic rise and then break out into this symmetrical triangle formation, this is usually a bullish pattern, and breaking out of the symmetrical triangle as soon as we hit the point of convergence, or it could happen before, again, depending on good news, we could see a breakout to the upside. Now, there was some good news earlier about Facebook being in secret talks with Stellar. Not sure what the blockchain offering of Facebook will be, but it might involve Stellar as they are talking behind closed doors at the moment. So anyway, back to the technicals. You could justify opening a position here, or you could wait to see if we do see a breakout to the upside or fall back towards the support line of Stellar. It really just depends on your trading intentions. If you're a short-term trader, a day trader, or you're looking to hold this long-term, there's certainly different tracks that you could take at this point. And if you look at the 1 week chart for Stellar, you'll see that we are in the same symmetrical triangle formation. Obviously, it's a lot shorter because these increments are a lot longer. These are weak candles. So yeah, we are still within the same formation, and obviously we're going to get squeezed until the point of convergence, and then we could see all-time highs from here if we break to the upside. Lastly, news in the traditional markets. You see that the Dow slides as Turkey's current currency crisis rattles Wall Street. So our great president said that he would double the level of tariffs applied to Turkish steel and aluminum imports. That sent Turkey's currency into a tumble. And because of that, the NASDAQ fell on Friday as well as the Dow. Also, the core rate of inflation over the past 12 months jumped to 2.4%, the highest rate since September 2008. This isn't good. Now, in terms of the link between traditional markets and crypto, you hear different arguments. And I don't know if anybody studied this in depth, but you hear different sides of the argument saying, you know, there's a group that says, oh, when stocks tumble or when the traditional markets tumble, that's good for crypto because that means more money is going to come into crypto. But I don't know if there's any correlation between money flowing out of the traditional markets into crypto. And then you'll hear the argument that when the traditional markets falter, so does crypto. But, you know, I don't know if there's enough data to discern a real correlation between the two markets. So we'll continue to monitor and see what happens. But this isn't good for the traditional markets for sure. That is it for this video. Subscribe if you haven't yet. Hit that notification bell. If you want access to these trade alerts that you see here, the link is in the description. Sign up to the Patreon for the trade alerts and the weekly crypto picks. Join the Discord. It's 100% free. That is the easiest way to get a hold of me. Stay safe out there. Peace. Oh, and we will be doing a crypto giveaway the next video, I promise. So leave your crypto addresses in the comments since we did hit 21,000 subscribers. Thank you so much. I saw from the last video a lot of you left your crypto addresses there. Continue to leave them in the description, and I will certainly pick a winner at random and do a crypto giveaway. I might do a few of them, especially since we're in a bear market and I want to give you guys a chance to win something. All right, peace.